10th of October, and the 6th of October. I missed a couple days. I don't like to brag, but sometimes you have to brag. I mean, yesterday we called the market to a T. We've been right on as far as the bullish market. We talked about how the market had to get above that 50% point, and now we're right here. We're right at that 1972 to 1980 area, and will the market go get up above that and keep going higher? I did not open up my toss charts this morning because I had a problem with my charts again, but you know what? I'll figure it out. The only thing I can tell you is that I can only give you targets on the upside. I think we're in this period where it's going to get stupid again, and everybody's just going to be buying breaks, right? So, barring on some news that could spur the market or to jolt the market back down to the downside, I don't think that's going to happen. I think earnings are going to come out in the fourth quarter, and you're going to see that the market is going to be stronger. We talked yesterday how I thought the market could get to the 2100 area again. Nothing would surprise me in this market to bring it back up to the highs by the end of the year. That would not surprise me. I'm just saying that the market absorbed a lot of news. When we talk about the news that it absorbed, global slowdown, China devaluating the currency. We've got the problems that we've got, with Volkswagen. We've got the Fed not moving. Everybody worried about the Fed and so on. What I like to see the Fed do is like they did back in the day. Back in the day, here's what they should do. They should come out and tell nobody and just cut the rate by a quarter point, right? Like Volcker did, like Greenspan did. Those were the guys. They knew. Let the market go. Let it do what it has to do. Because I'm going to tell you right now, that quarter point is not going to mean diddly, all right? Doesn't mean that people are going to be fleeing from stocks to go to bonds. We talked about this yesterday. Someone asked me about the inverse relationship. There's no inverse relationship. There's nowhere to go to get yield. And if people understand what yield means that if someone wants to put $1 million in the bank and live on their interest, they can't do that because there's nowhere to go. So quarter point doesn't mean anything. So I'm going to share my charts now and just give you some targets on the upside and tell you where we have to stay above. And I'm going to tell you right now, we're a buyer of dips, and just keep buying dips, especially if we get above the 72.80. They're going to end up challenging us there. Now we're going on our 6-day higher if we go higher today. So I think, it's just going to be one of those dumb periods where all you can do is buy the market. I think that's what we're going to see. I'll give you areas that I'll show you that we can go back down and sell the markets if we get down below it. But this is what I think is going to happen. All right, so let me get the chart sharing. Something happened with my charts once again last night where they just have blown up, which are going to be good for you. Why isn't this showing the right chart? This is on screen 2 now, right here. Yes. Sure. I think that's what happened, Anthony. I screwed up with all these things here. All right. Here we go. Here's the profile. All right. So let's talk profile. Hey, and remember, if you have questions, let's get the questions in. And, I've got my mic closer to me so we don't sound echoey. All right. So here's the overnight, right? 1975.25. Let me show you how big my charts have gotten. I don't know if something happened. 1975.25 is the high. We've got a low of 63.5, and I've drawn this triangle, put it in the green, and this is it. We've got to get back down below this for the market to turn somewhat bearish, right? Underneath here, under 60.5, then I'd be looking for the market to go back and make some retracements. But this is it right here, 63. This 65.75 down to the 60.75. I know it's, you take a look at it. It's the bottom of the overnight value. All right, and it's sort of the middle of yesterday's value. Right now, on the upside, okay, if we take out the Globex highs, all right, we have this. We have 76, and then I've got 77. Okay, all right, and then above here, above this right here, the high of yesterday, 1980. Forgot about it. It's going up here, 83 to 84. I got a big target at 84. All right. This is an old VPOC that hasn't been covered at 1985. We talked about that before. All right. That's an uncovered VPOC. Let me see if I can get back to it and show it to you. Damn it. Come on. Here it is right here at 1985. Here it is. This is a nice thing about the new software. All right. Gives you dotted lines for your old VPOC. This is an uncovered value area high of 86. All right. 1988, another uncovered value area high. All right. And this is a 90-day chart. All right. 90 quarter, 92.75. We get above we get in this 80 area, and you know how they say, forget about it. That's where I think the market's going, and there's nothing you can do about it, right? It's like Tommy when he was gone. There's nothing we could do about it. All right. Great movie. Good fellows. All right. So today we got a value area high of 1976, bull bear zone of 1972 and a quarter, point of control of 1965 half, low of 1959 half, 1959 half. Okay. Currently, all right, 5-minute pivot is, I'm missing the 5-minute pivot. Where's it at, Anthony? Oh, there it is. I'm sorry. It's hidden right here. Right here, we got the 5-minute pivot. Let me go to the crosshairs so we can accurately display the information to our listeners. All right, here we go. Right here. 1966, the 5-minute pivot. 1966. Let me open this, get it a little larger so you can see it. 1966. All right. That's where we're at. Okay. Obviously, the key to the market moving higher will be getting outside of value. Okay. Right up here, we're trading now at 74. Above 76, not much to say. Not much to say. I think the market will continue to go higher. It could be one of those grindy, oh my God, I'm waiting for a retracement, one of those days, you know. Sort of like yesterday after we made an opening drive. It was really very difficult. How do you stay on those longs, right? Because especially when you come from a period where the market has, let me change this to a 5-minute chart, and let me get my crosshairs up going. And so 5-minute pivot on the Russell. Move it over. Here we are. 5-minute pivot on the Russell. 11:31.20. 11:31.20 for all you Russell traders out there. All right. And also, we, as we know, we like to get, I think the new word people use is confluence. I don't know. Whatever. I used to call it, I like to get a lot of people agreeing. I guess you can't teach an old dog new tricks, right? NASDAQ, 5-minute pivot. We're on a 1-minute chart here. Let's get out of the 1 minute, put it in a 5-minute. Crosshairs. Let's move the chart a little bit. There we go. Make it a little bigger for you. 5-minute pivot. 42.92 half for you NASDAQ traders. 42.92 half. All right. We need to stay above that. Okay. And then for all you Dow traders, which let's bring this down here, get it into the picture. Let's make a 5-minute out of it. Okay. Move the screen over, make it a little larger, get our crosshairs. So even a guy like me can do this. Even a guy who has no computer knowledge at all can do this. Not well, but I can do it. All right. Okay, 16, 619. Right? 16, 619, 5-minute pivot. Everything looks like it's going to be in a buy. But what is also the most important thing to a market continuing to move higher? And for us, it's always taking out the Globex high. Can't get failure at the Globex high. You can't get that out of the way. And when you take a look at this market, overnight market, trading at the top of value, I mean, this is pretty well finished on the bottom, kind of evenly distributed. All right, starting to look like a P. Look at this P. Woo! Right? P's mean the market's going to rally. I don't know why, but they do. Just talk to all the experts out in profile, which I am not an expert in profile. I use profile, and I became pretty good at it because I watch it every day, and I made a lot of mistakes. And profile is great for forecasting. I mean, trying to see what the market's done and where it came from, and it helps you, right? Gold, look at this. Gold, big move up today. Big move. Do I still have my the data series, Anthony? Let's see what we got here.
What do you want to do?
I want to see how much gold is up exactly.
Oh, your market analyzer's not up.
It's not up?
No.
Okay. All right. Well, it looks like gold has rallied from 1138 up to 1146. All right. So I can use the old math. It's up about $6.5, $7. All right. And, very small range yesterday. Gold's value area high is 1137.20, low 1136.20. And then the point of control was down here at 1135.40. All right, bull bear zone is going to be 1137.40. 1137.40 is the bull bear zone. Let me move it down to here you go. Let's see if I can move it this way. Bull bear zone 1137.40. Okay. Low, high, point of control. All right. So gold is on a move up. Strange, right? Because there should be that converse relationship between gold, okay, between gold and instability in the financial markets, right? And also, you have the idea there's going to be no inflation. We got U.S. equities rallying and gold rallying at the same time. So, mixed bag of donuts. Remember I told you about gold. It is a demand product. So, this is the bonds trading way below value. All right. Value area high of 159.05, 158.30. And actually, the bonds are trading like they're going to do exactly what I said. Come up with a surprise interest rate cut. Would that be something? All right. Point of control is 157.28. Okay. Let's get it up here. 157.28. And bull bear zone is 157.18 for bonds. 157.18. And the market's trading way below value. Way below value. All right. I think the bonds will rally if everyone's now pricing in a less than 30% chance that there will be a rate cut. All right, oil. This oil just keeps trading in the strange, trying not to go down below $40. So we got value area high of 46.67, low of 46.39. Point of control here at 46.25. Bull bear zone of 46.15. 46.15. So that's what's going on with oil. All right, just to recap. All right, I think the market's going to get difficult to trade because we're all going to be looking at each other and saying, "Oh my God, it has to excuse me, it has to retrace," and we may not get it. We may just get one of these this periods where the market just makes newer highs every day, and it's taking back. Now we're getting to that area that we've talked about yesterday. I don't have my toss chart up. I should have opened it up, but it gives me a 2-year look back, right? 2-year look back at the market from the lows of 1806 up to the highs of 2134. If you do a Fibonacci retracement on that, the 50% was around 1933, and then the 68.1% was right above 1973, which is that where we're at right now. If you just take the low of 1831 made a couple weeks ago and the high of 2134, do a fib on that, the 50% on that is the 1775, 1780 area. I don't have the chart open. So we're right there. We're right there. Do we get above that and go and rally the rest of the year? The market has absorbed a tremendous amount of bad news, and we've gone absolutely nowhere. We haven't got below the lows of 2014. So you guys make up your mind, all right? So there's no yield. Where are you going if you want yield? You have to go to the market. You have to go to the equities. And emerging markets seem a little bit scary, so I think that's why there's a lot of money running into the U.S. equities. Okay, not bad from a guy who, who's been doing this for a long time, and I'm just seeing these market cycles. And traditionally, the fourth quarter of the year is traditionally a bullish quarter. We've got heading into the holidays with retailers expecting a lot of buying. So I think that's what's happening now, and that's what's fueling the market. Got any questions, Anthony?
Yep. They want you to explain. We put out one of our targets yesterday was 2 times the IB range. So I want to know what that is.
All right.
Or how you calculate it.
Okay, let me open this up. I'm gonna have to kind of redistribute the charts. All right. So you have to understand what the opening, what the IB range is. So the IB range is bracket B and bracket C. So the first hour of the day, there's a high and a low, which establishes a range, and then you just basically take what that range is, and you take half of the range, you add it to the full range, so you get 1.5 times the range. Now this software, which is awesome, okay, automatically calculates those. So I'm going to move this forward, okay, and I'm going to start with yesterday. Now my charts have been something happened where they opened up and they're huge. They're just huge. I think I rubbed some cream on them or something. I don't know. Anyway, so anyway, so we take a look at yesterday's high and low. So we started, here's bracket B, okay? 1955.25, all right? So then we go, what's the high of bracket C? Well, the high of bracket C was 1968.25, all right? So that's basically a 1,300 point range. So I don't really have to calculate that anymore because the software has showed me right here, which you're going to be able to get on Man Over Market, all right, that the opening range, all right, and then the first 5 minutes, it was, I believe here, the blue area, right? So from this B up to here, okay, gave me the opening range, right? Then what the software does is it calculates 1.5 times the opening range, right? So 1.5 times, let me make this bigger now because I've explained to you what the opening range is. The opening range was right here, okay? And we put it out at 1974.75. So right there, okay? And then sometimes when the market is extremely bullish, it may go 2 times, right? So we put out yesterday that 2 times the opening range was 1981.5. We fell short and we stopped at 1980. All right. And I think the target I was quoting everybody yesterday was, I said if it got above 72.25, 72.75, which it did, that I thought the market would run up to, where do we boom them at? 79, 78. 78. I said the market was going to 78, right? So I missed it by 2 points, right? Went a little, 2 points higher than I thought. So is everybody understanding what the opening range is? There are 1.5 times the opening range and 2 times the opening range. And so I don't have to take my calculator out. The software calculates it for me after bracket B and C. Okay?
Okay. More questions about the program. Do we have any kind of target date on when we're going to roll the program?
I'm hoping October 1st. November 1st, because we're just waiting for some work on our simulator that will allow people to get into it, and then everything will be live on Ninja Trader. You'll be able to get the charts, the program, and that's it. I'm pushing as hard as I can for November 1. So,
is there any live commentary on the program? Do some live commentary.
Well, what do you mean? Is there going to be live commentary? We're going to do a morning meeting. We're going to have a chat room that will be people that are in the program and if people want to pay to be in the chat room. Looks like we're making new highs as we're speaking here, right? So, look, I think the market is going to rally, up until 83, 84. Now, remember, this is my opinion for educational purposes. So, I always kind of, don't always just jump in the market when, based on when I see things like this. Okay. What kind of news is out this week, Anthony?
Let's see what we got. Nothing today that would really affect us.
All right. So look, we're getting to our first target, 77.25. If we stay above this, I think the market's getting to 84. So, that's where we're at. We gotta take out. We're setting a new Globex high. Excuse me. Sorry. We're setting a new Globex high as we speak, and then, we've got yesterday's high, right? So, you got to be a little careful. People get exuberant, and then right before all this buying happens, normally I would tell you, be careful. They're goosing the market so they can sell it to you, and get a little bit of a retracement. But I'm going to tell you right now, I think if the market now, I gave you that area, but right now, I think the support is going to be right in here,
Get some numbers on Thursday on jobless claims.
Jobless claims. What else?
We get some natural gas reports Wednesday. Petroleum status report Wednesday, Thursday, natural gas. That's it.
That's it. All right. And we're going to start expanding our coverage because in the program to start, we're going to allow you to trade S&Ps, ZB, the bonds, oil and gold. So we're going to start expanding the research. We've been, it's been really a difficult not difficult, but we're putting this stuff in, programming it. and the programming language has different nuances from different platforms. So it's a little bit tedious. Anybody who's any good at programming in HTML5, you can contact us. We're looking for some help. So give us a call. All right, send us an email. All right, everybody.
Anthony@manovermarket.com.
Anthony@manovermarket.com. All right, everybody. You guys have a good day trading, and hopefully you made some dough yesterday. Stick with me, guys. Stick with me. I'm going to make you all good traders, and we'll start our own hedge fund together. All right? Talk to you later. Good luck.